Good weekend, all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up, and this is for Friday, September 17th, 2021. Now, on this edition, we'll take a look at one monthly chart, and then everything else is going to be on the weekly charts, not the daily. But before we get there, take a look at all the red behind me. Platinum was up, and the dollar index. Everything else lower on the day. Interest rates climbed today. You're into the 1.36, 1.37 level, the 10-year. Look at how you've been selling off a little bit in all the energies, even natural gas getting its final break here. Bitcoin stable today, but everything else ugly, ugly, ugly. And as I said, it was triple witching day today, so you'd expect craziness, and you had it, and you had good volume. Now, when we look at a monthly area chart of closes, and we're only halfway through the month, and you know that, the market is down 1.24%. That's not problemsome. On a weekly area chart of closes, you wouldn't believe it, but we closed a fraction higher, 0.14% this week. And when we go now building the charts, this is how the weekly chart looks. And here it is with the swing lines. You still have the pattern of higher lows, higher highs, which makes an uptrend. Next, you look to see where the market's at in relation to key moving averages. When the market is over the 18-week average, I maintain a bullish bias. So sometimes you get where the daily charts, which they are in downtrends, and the weekly chart is in an uptrend. It's probably best off hanging back when you see that type of pattern, and you can see the ugliness you're getting. This is the correction. And remember, each bar makes up 5 days of trading. Therefore, we've been getting 2 weeks of corrections in the market. When we look at Bollinger Bands, they work the same principle as they do on a daily chart. Markets will not stay over the upper or lower Bollinger Bands more than 5% of the time. And that becomes a resistance point on the upside. It also can attach itself to it. And when it does it every single week, that's a sign of strength. Then eventually you pull back, and that's often met by momentum backing off a little bit, which it's doing. Now, what happens here in the slow stochastics is slow stochastics typically travel the traditional way between 20 and 80 readings. I view it that any reading under 30 is oversold, any reading over 70 is overbought, and when the market starts getting both numbers going sideways over 80 until the red line closes back under 79, the market converts itself from being overbought into developing a strong uptrend. And I don't think you could fight that the fact that the market went to a new all-time high, and now we're finally getting a little bit of a pullback. The other thing to watch is the market has held beautifully the 18-week moving average of closes, and until it stops doing that, I have to assume that pullbacks in the market are still going to be met with strong buying down there. The Nasdaq is the other index that has got the embedded reading, the same pattern of higher lows, higher highs. You're coming off an all-time high, and even for this week, it's, you know, if you were to ask me were we down for the week, I'd say that. You were up 0.29% for the week. The Dow was up 2.26% for the week, and it corrected last week into the 18-week average of closes in red, lost its bullish momentum, and it's a market that has itself, in terms of the swing line, in a downtrend. If you look at the close at 34,696, it's over the 18-day at 34. It's underneath it at 34,723. So you have the trend down, the bias down. But I think what's really going to happen is you're going to find yourself bouncing around that narrow Bollinger Band. I am still expecting by year end, the market breaks out into new highs. We'll see if I'm right or wrong. In the Russell, this market has been drifting along in momentum. The trend has been higher Bollinger Bands with, higher swing lines with higher highs, higher lows. My brain was on the Bollinger Band, that each time it's come down to it on the weekly chart, it's been short-lived, staying under it, and it bounces right back to the 18-week average of closes. I don't see that pattern changing. We then step over to the 30-year bonds. And as you can see, a higher high, lower low, momentum has turned down. This market lost its way to the upside. It's not trending. It has upside bias and momentum pointing down, not a trend market. The The 10-year note, however, now has lower highs, lower lows. The settlement at 133.13 is under the 18-week average. I think the market turned bearish, and because it's an outside week down, until today's high, this week's high of 134.10 is taken out, I think it's clear sailing to the downside, potentially 132.05. We'll see if I'm right or wrong. What's going to be the problem this week in this market and the 30-year? Any idea? We have the Fed FOMC meeting, the two-day meeting this week. I don't expect the Fed to do a darn thing, but we'll see. And markets have a way, they like to whipsaw in front of it. Everybody's hoping, they're going to give you a tip-off on tapering, whatever they're going to do. Bloomberg had a survey that said that 47% of the people or so that were surveyed think a November tapering, that's the highest percentage they had in the reading, is most likely. We'll see, and the high percentage of people also thought you won't see an interest rate hike till 2023. But those type of polls are very fluid. In the dollar index, you have a higher high, lower low, overbought. You don't have a trend. You have pretty stiff resistance at the 100-day average in the upper Bollinger Band. And so far, support seems to be showing up against the 18-week moving average of closes. The eurocurrency still in a bear trend. Interesting. France just recalled its ambassador from the United States. They are beyond pissed at the U.S. about this submarine contract that the UK and the US basically stole from right under them. That's what I think. On the other hand, a lot can happen before these submarines are ever delivered. Anybody have an idea when they're going to deliver those submarines? I looked it up today. Maybe 2040. You think I'm kidding you. 2040, 18 years from now, is some of what they're saying. I read the article. I read it 3 times to be sure I was right on what I'm doing. They don't just take what's off the shelf. Australia has the right to modify and do a bunch of things. Could it be sooner? Of course it could, but that's what the article I was reading said. I thought maybe 3 to 5 years. Wow. In the Canadian dollar, lower highs, lower lows. You can see how the market's pushing right here. Momentum down. You're in a downtrend. What happens on Monday? The Canadian elections, the snap elections, parliamentary elections. Keep your eye on that. Japanese yen in an uptrend, very close to the major resistance of the upper Bollinger Band. The odds of getting and staying over that number, slim to none. Doesn't mean it can't happen, but you rarely do that on the upside. You can see it back here. You get those spikes and then it comes right back in. Bitcoin a week ago hit that upper Bollinger Band, and since then, the market's been dogged by just going sideways. I'm not calling I call it doggy coin. People call it Dogecoin. It was created to be dog coin, I'm sure of that. And as you can look at this, just sort of hanging right at that AT level. In the differential between Brent and WTI crude, a bit of a correction and stabilizing. And if you look at the energies for the week, you were up 13%. In the Brent, uptrend. WTI up 3%. That gives you why that spread differential took off. Gasoline, pretty flat for the week, as you can see. Went up to the 18-week average and having trouble there. Not trending up any longer either. So you put it all together, you come up with game plans. And one of them I have for you is my special grain report. Now, if you're watching this, I'm hoping it's still active on our website. I typically don't keep these up for more than 3 business days. You either look at it or forget it. That's my attitude on it. So when I put these out, don't think you're going to be able, I'm going to go back and look at Ira's archive. I don't like to do that. I believe that if people are interested, they look right here and now. And this one focuses on soybeans because I believe at the end of September, this month, right into that first week of October is where you're going to see a big, serious low in the market. Doesn't mean that prices can't bottom out before then, but I think you then, in momentum, take off. I give you an example of the 30, the 5, and the 15-year patterns. I take you through the weekly, the monthly, and the daily charts in the Nove Beans. You want to see it? Go to our website. Under the word research, you'll see it right there. I'm Ira Epstein. Have a great weekend. I'll see you Monday.